In just the last 4 years, we've seen uranium return a staggering 400% from the 2020 pandemic lows to its high in early 2024. This is the Sprott Physical Uranium Trust. This recent move up in uranium has led to a breakout from a 15-year-long basing pattern for this asset. Uranium prices surged, beginning a multi-year rally as you can see here. What caused it? The answer lies in uranium's unique supply and demand dynamics. This chart shows us the global uranium demand since 1945, along with the global uranium production for the same period. Demand was consistently rising until the mid 2000s, driven mostly by uranium's use as fuel for nuclear reactors. And in terms of production, you can see that it had generally been keeping up with demand until the early 1990s, when production started falling off aggressively following the collapse of the Soviet Union, falling below demand in 1991. Meanwhile, demand for uranium continued to grow before tapering off in the mid 2000s and maintaining a relatively stable level of demand since then. So, since 1991, we've been in a uranium supply deficit, meaning uranium supply is below demand. This shortage set the stage for a speculative bubble in the mid 2000s. Global uranium prices went from around $10 in 2003 to a peak of $136 in 2007, before crashing by over 85% over the next 10 years. Now, you might be wondering why uranium prices declined so significantly if there was a supply deficit. And that is because from mid 2000, uranium demand started stagnating, but uranium production started increasingly rising, which was likely a result of higher uranium prices that incentivized more producers. This began turning around the demand and supply dynamics for uranium and making the uranium market less tight, which led to the sharp decline in uranium prices. That is until the mid 2010s, when, as you can see, production peaked. Since then, uranium production has been declining while demand has remained resilient, even ticking up a little recently, indicating that the supply deficit is potentially building again for the commodity, similar to what we saw in the 1990s.